Hello and welcome to Big John's Thoughts on the Market for February 2016. We saw the beginning of 2016 really continue on from what we saw at the end of 2015. Still quite a bit of supply in the market, not as much demand, but we are starting to see the market stabilize a little bit. When we take a look at the absorption rates, whenever we look at January, any year, whether the market's good or bad, we see that those numbers do increase a little bit versus the previous few months because we are just coming out of the holiday season. And what we saw this year overall is absorption rates are sitting at about 6.5 months worth of supply in the market. A year ago, they were about 5.5 months worth of supply. The single family homes are sitting at about 5.5 months worth of supply this year, and they were about 4.8 months worth of supply a year ago. So again, we haven't seen over the last year that absorption rate increase a whole lot. On apartments and attached homes, they have increased a bit more. Attached homes this year were about 7.25 months worth of supply. A year ago, we were about 5.25 months. Apartments were sitting at 9.7 months worth of supply. Again, a year ago, about 7.75 months worth of supply. So again, those have increased by about 2 months each. And what that is that you've got a lot of the new inventory coming into the market, a lot of the bigger multifamily projects that they just can't stop on a dime. It takes a while to bring them to market. And so we are seeing a little bit more inventory in those marketplaces. The sales, number of sales to new listing ratios, again, at the beginning of the year, those numbers are substantially lower than they are over the previous few months. But it's interesting. This year, we see that there's 0.28 of a sale for every new listing coming into the market. A year ago, that number was 0.27. So actually, the sales to new listing ratio is, albeit small, a little bit better than it was a year ago. The total number of sales are down about 13% versus a year ago, but we're also seeing that the number of new listings coming into the market is down about 16% versus a year ago. So again, we really look at that, the demand in terms of the number of sales and the supply in terms of the number of listings, how those numbers are interacting, and we see that both of those numbers are lower, which is far better than if we saw that the number of new listings was continuing to really increase substantially versus the number of sales. We also see that the total number of listings is up by about 4.8%, so total inventory versus a year ago. So we do have a little bit more inventory, but again, that's not a huge discrepancy or a huge difference versus a year ago. And again, very happy to see that that number hasn't increased, by 10 or 15 or 20%. Interesting thing we are starting to see in the market. We're starting to see some big institutional investors. We're starting to see people that, individual investors starting to really look at coming back into this market. What they typically try and do is look at, and they don't try to pick the absolute bottom of a market, but when they start to see some stabilization and they feel that there is upward potential over the next number of years, they start to look at coming into the market, take advantage of increased inventories, good pricing, and again, they've got some really good low interest rates out there that are available for buyers. So it's important to take a real close look at that. Real estate market's no different than the stock market. Typically, the people with a lot of money that research it every day, they typically are going to be buying a stock or real estate before most people are comfortable doing it. They own it, and then as the market goes up and the rest of the people start to come into the marketplace, they get to benefit because prices start to increase and they're able to sell that inventory that they purchased at lower prices to people that are maybe a little bit later to the mark. And again, it's almost that herd mentality. People tend to wait too long to get into the market. And to emphasize that, a little quote from Warren Buffett basically says that they simply try to be fearful when everybody else is greedy and greedy when everyone else is fearful. So right now, people are definitely fearful. We're seeing those big investors starting to be greedy, quote unquote, coming into the market, looking at trying to scoop up some of these deals. And it's really a matter of where do you want to be on this scale? Definitely, there's some people that do want to wait, and that's fine, but they do realize that they're going to be paying more for the product, that they may miss some great opportunities. And then there are people out there, and we have a number of you that we're working with right now that are looking to get into this market to take advantage of a little bit lower prices, more inventory, and great interest rates. Hope you're having a great day and enjoying some of that beautiful weather out there in Calgary. Hardly feels like winter, so that's definitely a positive. Have a great day.